what thing that you learned in the Wall Street that you brought into your real estate career and still is helping you?
Yeah, so I had a lot of really fantastic bosses when I was in the corporate career. I think that's something that is missed in the entrepreneurial world is just that there are a lot of really great ways to develop in corporate America, even though it may not provide you with everything you want, there are some benefits. And so one of my managing directors, her name was Margaret. She had come up on Wall Street right in the 80s, so she was, uh, she was very skilled. She had to compete with, in an environment where women were not, equal in a lot of ways, and so she had to work twice as hard and be twice as good as her peers, and she was in a lot of ways. So what she told me was you have to have an intense level of paranoia when you're operating, especially when we were working directly with clients and we were building portfolios for clients. They were institutions. Usually those portfolios were between 100 million and 2 billion. So that was kind of our sweet spot, and mostly fixed income. So very conservative institutions or family offices. And when we were building materials or models or presentations, it's very important that we had no errors.
This is the Wealth Vibe show where we explore how to create, protect, and expand wealth, not just financially, but strategically and intentionally. I'm your host, Vinky Loomba. Let me ask you something interesting today. What does wealth really look like when you have lived through multiple market cycles, sat on institutional decks, deployed billions in capital, and still care deeply about building people, not just portfolios? Because the real wealth is not built in one market phase, it's built across cycles. So today's conversation is about perspective, discipline, and long-term thinking. So my guest today is Michael Pouliot. Thanks for correcting me on your name. Founder of CIO of Carbon. Michael has closed over $1 billion dollars in real estate acquisition and brings a rare blend of Wall Street discipline, operational insight, and a strong belief in mentorship and education. We are diving into workforce housing, market cycles, inflation, technology, and what it truly takes to build durable wealth while staying aligned with purpose. So, welcome, Michael, to the Wealth Vibe Show.
Oh, thanks so much for having me. After that introduction, I'm excited about this podcast. You did a great job there. So, yeah.
Yeah, me too. I'm really excited to hear your insight on the market because today's topic is very interesting. It's about building wealth across markets. So I'm going to start with the origin of your story. If you can take us way back to the beginning,
Sure.
what were your early experience in real estate like, and how did that shape your investor journey?
Sure, yeah. So I come from a family of real estate entrepreneurs. So my grandparents after World War II came back, and as they all were all looking for jobs and things to do, and there were a lot of people looking for homes, and so my family went into home building and municipal building on either side, so it's on both sides of the family, and that kind of carried through the generations. It didn't necessarily grow from generation to generation, but each generation had their own hand in being builders of some sort. So I grew up on job sites, my father being a single family home developer, and it was very difficult work, very hard work working on job sites, especially when you're unskilled, as I
Mhm.
was, and still am from a construction perspective. And so there was a lot of back-breaking work and very hard to keep up with everyone else on the site. So I learned that it's a long a day's work is great, and it's great to see these structures go up and new development and start at the, the dirt all the way to finished product. It was great to see that and see how those projects unfolded. But I decided instead of going into the family business or real estate generally, that I wanted to make a career on my own and go onto Wall Street. Seemed like the cool thing to do at the time. So that's what I did. I went to school for finance. I then started my career in Merrill Lynch in wealth management, and then ultimately at JP Morgan in their analyst program, working on the fixed income trading desk. That is really where I started my career. Yeah, and how I sort of went from real estate roots to Wall Street, and then, I'm sure we'll get into the rest of it from there.
Okay, so I mean, quite a journey, right? First of all, learning as a kid about real estate and just learning about the construction or watching that, observing that, that would have been so much fun. So why Wall Street all of a sudden?
hmm Well, I think one, as a developer, my father, the development cycle is volatile. And so for me, it felt like development was too volatile for my personality. I really like the idea that you can buy a property that's already full and just lift rents with some value add and some less execution risk. And so I saw my father get caught up in the savings and loan crisis in the 80s and then the '08 great financial crisis, based on he was working, very high luxury spec homes. And so when, high luxury spec homes during those times didn't fare that well. And so there was a lot of circumstances where he had product he had to rent and then sell later. And it was a long slog. And I just didn't like that mentality of the development cycle. And so that's why it really has informed a lot of what we do today, which is, workforce housing, buy existing product in areas that have established neighborhoods and great schools where people already want to live. We already know they want to live there because they're already living there. And so I think uh, that's really informed our real estate strategy. Why I went into Wall Street was because I didn't want to do development, and Wall Street, I was a numbers person and just seemed like a great place to start a career and make a lot of money. To be honest, when you're starting out in your career,
Mhm.
it's like, well, how can I match my skills with making good money so that I can do the things that I want to do, which at that time is what I thought, making a lot of money would allow.
Good. So what made you come back to real estate?
Well, I realized that making a lot of money is not necessarily everything,
Mhm.
especially when you're working 16 hours a day, as is not uncommon in banking and investment management. And so, I was working really hard. I was getting a lot of skills. I was making good money, but I had no time to do anything. And so at that time, my now wife, then girlfriend slash fiance, depending on where we are in the timeline here. She was working in the Princeton area. I was commuting from Princeton to New York, which is about a 2 hour commute each way. And it's like a car to a train to two subways to get to the midtown where our office was. So that was just draining. And so after many years of doing that, realizing, hey, I'm not really getting ahead, I'm not really getting where I want to go. How can I create some control around my time, around what I'm doing, and how can I also impact my earnings, right? How can my effort really impact my earnings, which really isn't possible inside of that really structured environment of moving from analyst to associate to VP to managing director. So that's when I realized, hey, I need to start doing something that is on the side on my own, and that's why I started the side gig essentially of doing real estate, and I did that alongside my corporate career until I had made sufficient money to be able to, leave my corporate career and go into real estate full time.
So how long was your corporate career?
So I graduated in 11, and I started acquiring real estate in 2016. By 2019, I was out of the job and
Corporate,
fully in my own
corporate
business.
America.
So it took about
So it
three
was very
years from the
brief.
first purchase. 3 years from first purchase to making enough money to replace my job income, and that would have been about a 10-year like kind of corporate career before I I went on to do this.
So, okay, 10-year corporate career. So
Mhm.
you went from real estate, having the experience, like first-hand experience in real estate, going into the corporate world because you wanted to experience that world and just wanted to get away all the chaos of real estate and
Mhm.
just make more money, like you said, So money took you to the corporate career, but then
Mhm.
you quickly realize, okay, there's a time commitment and time is money too. So for the time freedom, you came back to real estate.
Mhm.
So, but it's a two different experiences right here we're talking about. So I wanted to ask you this question. What thing that you learned in the Wall Street that you brought into your real estate career and still is helping you?
Yeah, so I had a great, a lot of really fantastic bosses when I was in the corporate career. I think that's something that is missed in the entrepreneurial world is just that there are a lot of really great ways to develop in corporate America, even though it may not provide you with everything you want, there are some benefits. And so one of my managing directors, her name was Margaret. She had come up on Wall Street, right, in the 80s. So she was, she was very skilled. She had to compete with, in an environment where women were not, equal in a lot of ways, and so she had to work twice as hard and be twice as good as her peers, and she was in a lot of ways. So what she told me was you have to have an intense level of paranoia. When you're operating, especially when we were working directly with clients and we were building portfolios for clients, they were institutions. Usually those portfolios were between 100 million and 2 billion. So that was kind of our sweet spot and mostly fixed income. So very conservative institutions or family offices. And, when we were building materials or models or presentations, it's very important that we had no errors in that, and that we had a level of paranoia, intense paranoia, and that was the lesson really from Margaret. That when you're going in front of a client or a stakeholder, you need to bring your best foot forward, right? You're already competing against everyone else, so don't shoot yourself in the foot by using the wrong font or the wrong logo or the wrong master slide. And it seems sort of silly because they're very little things, but how you do one thing is how you do everything. And so really thinking about that perspective and making sure, yeah, you don't make a mistake that costs you the opportunity in the client meeting. But then also in JP Morgan, it was a two-strike policy. So you make one mistake in a client meeting, there's a warning. If you do it twice, you would get fired. So the proof was in the pudding there too. It was ingrained into how they hired and fired people too.
Wow. I like one thing that you said, how you do one thing, that's how you do everything.
Mhm.
Yeah, that I think that's so true for everyone and everywhere. So I'm going to ask you this question. I'm like, since this is a Wealth Vibe show, I talk about the wealth building strategies, and you did pretty awesome job there. So I wanted to ask you, how did your definition of wealth evolve when you're going through this experience from real estate to Wall Street and back to real estate now? So what is the difference between now and then?
Well, as moving into entrepreneurship, you do a lot more like self-assessments and trying to figure out like who you are, what's important to you. I think that can be valuable for all of our teams as well. But what I learned as I progressed through my career was autonomy and making my own decisions and, not necessarily working less. I wouldn't say I work much less than I did before, but I pursue uh, largely what I want to pursue that I think is most important. So I'm not waiting for someone else to say, hey, do this, do that. I kind of get to look at the lay of the land, see what's going on in my business, which I have a partner in as well, and figure out, okay, this is where I can be most impactful, and not also distract the teams from doing the work they have to do, which is probably the hardest part. Is I have plenty of ideas. It's just about how to prioritize them and execute them without distracting or confusing the operating teams. So I would say that's the big one there is just autonomy, realizing from you asked about wealth, I'd say that it's not so much about money for me, at least. It's more about controlling and understanding and directing my own time, which is our most valuable resource, which is what you mentioned kind of at the beginning of this is, I imagine that I will die with more than $1, right? I'm not going to run out of money, right? I'm going to run out of time. And so knowing that I'm going to run out of time and I'm not going to run out of money, I think that can be a really helpful frame to realize, okay, well, then maybe I should be prioritizing my time use more than my money use because, like I said, I'm not going to run out of money, but I am most certainly, absolutely going to run out of time.
Time is a wealth in itself. It's a limited resource.
Hmm.
And I think when you learn how to make the maximum use of your time, the wealth or the money follows. That's the way I look at it, you know?
Sure. Yeah, yeah. Well,
Yeah.
if you have the time and space to orient yourself around that, time scarcity, you probably have extra time to be thinking about money, right? So, I think it's a chicken or the egg sort of a situation where, yes, if you're focused on the time, then yeah, you'll start directing that time towards the things that are most important to you that you feel will, make an impact on whatever is important to you, whether that's your family or your spirituality or your community or whatever it might be for your particular personhood.
Great. So take us through your first deal and how you created this as your one of your wealth building strategies.
Sure. Yeah. So first deal, August 15th, 2016, I bought a two-bed, one-bath row home in South Philly. And I bought it for $25,000. This was in, yeah, the mid 2010, so things were a little bit cheaper then. But this is all still totally doable. The numbers may have doubled, but the percentages still hold true, no matter what the prices are. So 25K, totally bombed out. No one could live in that property. We gut renovated it, or I gut renovated it with, I project managed this, just to be clear. I did not gut renovate anything, but I did hire the teams to do it. We spent about another $30,000 to do that. So we were in for about 50 to 60, then about another $10,000 in soft costs. So 70,000 all in, let's say. I used a hard money loan to do this transaction and a HELOC. So I used a HELOC for the down payment and I used a hard money loan for the rest. It was 100% financed at what,
Mhm.
3% at that time, very low, 3, 5%, whatever it was, very low rates. And I had a corporate job at the time, so I could float the payments. It wasn't really a problem. We were living well within our means at that time. Both my wife and I were working at that time, both of us. So and then I went to a local credit union. I had them refinance the deal. They valued the property at $125,000. I refied out 100, so I paid off my loan. I paid off my HELOC. I pocketed another 30 extra K, tax free or tax deferred. I guess I should say. And then I rinsed and repeated that. And once I saw that model working, I did it about a dozen times in the first 12 months, just continuing to rinse and repeat in the same area of Philly because I had good deal sources. I knew the banks on the way in and the way out. I knew all the numbers. So it's just about how can I capitalize on this opportunity before the numbers change or the bank stop giving me money or something changes, right? So yeah, that was the beginning.
When was that? You said
2016.
2016.
Yeah, I
Wow.
guess that's 10 years ago now.
10 years ago now. That's a long time too,
It doesn't
actually.
feel like it, but
Yeah,
it's
it
some,
didn't
I guess
feel
it
like.
depends on the time of day. Sometimes it feels like it's been 2 seconds. Sometimes it's been 10,000 years.
Yeah, isn't that crazy though, right? When you're in the time, you feel like, oh my God, it's such a long time. And when you look back, it just feels like a blink of an eye. Oh my God, I was just
Hmm.
there a minute
Yeah,
ago. And
right.
then like
Absolutely.
30 years of my life has passed just like that.
Well, interesting. So the reason I remember August 15th is so my first son, well, my first child, I only have one son, was born
Mm,
in April of that year. And so
uh-huh.
a lot of the things that I've done have been to be able to spend more time with my family, so after I had our first, child, I was still working in my corporate career. And so it was like, how this is not going to work. I'm not going to miss out on my entire life just so that the partner who never shows up at the office is going to make, $10 million this year, and I'm just slaving away as a consultant, billed by the hour at that point. Um, so yeah, that really spurred that first purchase, and really, I guess I could say it's Owen. Owen was the trigger for the whole thing. But now he's, almost 10, right? He's going into, he's in fourth grade, going into fifth, and so, time moves very quickly.
Time flies. You're so right about that. And you mentioned as a childhood, you had the exposure to real estate, and then you saw, firsthand or secondhand, your father and yourself, going through multiple market cycles. So
Mhm.
at this point, I wanted to ask you this question, from your experience, what do you think? What separates investors who survive cycles, for all these market
Mhm.
cycles, or for those who just disappear in this market cycles?
Mhm. Yeah. Um, I mean, it seems as easy as just saying you just have to keep going. I feel like people, what they do is they get to some sort of friction or some resistance, and they assume the only thing to do is to totally move to something else. But really, like the learning and the growing happens from either going through that wall or going over the wall and learning and growing and strengthening whatever that skill is, right? Like you run into walls because you don't have something that you need to get through to the other side. And so maybe you bought deals with the wrong type of financing, or you in the wrong area, or maybe something else, right? Maybe you don't have enough operational staff or deal staff or whatever it might be. That's all opportunity. No one learns much from the go-go years. It's the down times when we really find out what we're made out of, and we find that if you can make it through these down cycles, you're going to be well positioned for the next one. And I think one of our corporate core values is taking a long view, and so my partner and I and everyone that is on our team really think about that when we're making all of our decisions. And so there's no way that I'm going to be doing this if I'm still able, by to 2100, right? I could still be doing this. And that's exciting to me. So I like the idea. And I also, the last thing I'd say about that is I think sometimes, people have, they're a little bit all over the place with what they want to do, and they don't know exactly, they don't know themselves enough to know what they want to do. And so they might be trying four or five different things at the same time. And then if they get resistance in one area, they'll stop that, and then they'll just focus on the other four areas. And it's, you're never going to get, you chase two rabbits, you're going to catch neither of them, right? So focus, I think, is a really important one, and just sticking with it.
Wow, you mentioned like few golden nuggets over here. So I'm gonna dig a little bit deeper over here.
Sure.
Long view, you mentioned long view. And then you also mentioned focus. I would say focus is the number one thing, whatever you're trying to do in your life. And if you really wanted to achieve something, you got to be laser focused on that. And then the other thing is, you mentioned like a very important thing is the people sometimes when they don't succeed is because they do not know themselves enough. And I think that's key to everything. And earlier you mentioned something regarding spiritual too. So I wanted to ask you, where did you get this mindset? Or do you have any morning practices? Or how did you come to this kind of mindset that you're kind of digging deep and you're looking at the problems or the challenges, like you said, those are opportunities,
Hmm.
opportunities to improve yourself, improve your project, to get
Hmm.
to your vision wherever you want it to go.
Hmm. Um, so I think a lot of it is just, luck of the draw, right? Like your disposition, who you are as a person. I think it does get, you know, influenced by your environment over time and as you grow into an adult. But I do think a lot of it is, I have a sibling, and if you look, we grew up with the same house, with the same parents, and we're completely different, right? And I think, almost anyone can appreciate that. And so, Yeah, I think a lot of it is just I was lucky to be born in a way that's like, hey, I'm just gonna keep getting up until I'm dead. Like, if I'm not if I get up, I'm gonna keep going, and that's just
Mhm.
like something. And then but the thing, obviously you can't impact, you can't do anything about that. So what can you actually do, or what has actually happened in my life? I went to boarding school as a child, and so I sort of was able to learn how to be independent very early. And that experience from being in boarding school was really instrumental to that. And it was very competitive environment as well. So you kind of learn to compete with others. And so by the time I was in college, it seemed like everyone else was just still trying to figure out how to do their laundry. And I was like, this is easy, guys. Like, I think just doing hard things and continuing to do hard things allows you to do harder things in the future. So that was one. I really I don't do like a cold plunge every morning and then like do a backflip and or something like that and start my day that way. I've got four children now. One of them is 6 months old, and so we're just getting to the point where I'm sleeping through the night. Luckily, I am starting to get to swim twice a week. I do like to do endurance racing, which is what comes back to that whole like doing hard things. So swimming, I think, is a great practice. It's similar to cold plunge in that it's not so, it's the thing. If I can get in the pool and it's cold and I can go for my swim, that's a good day. I've already sort of won the day at that point, just getting in the pool. And so exercise, is definitely like something that I think can help develop that grit and that, get up every single day and just do the work. The boarding school experience, the very competitive, I guess, Wall Street experience. And I think that that's probably enough for that. For that.
Yeah, I know. I think this is all good because all of our experiences, they shape us who we are, and that's very
Mhm.
important. And when you can see that, you have you can pause, and then you can take that pause into your favor, and then you can try to change the thing or mitigate the gaps if there are any, to excel in whatever you're doing. You mentioned hard things, at current too, we're in the hard timings too. So in the current environment, how are you thinking about inflation, tariffs, or even the capital costs when you're underwriting the deals?
hmm Yeah, so I think, one of the things that we really focus on is the location of our assets. And
Mhm.
I don't know if I mentioned this off camera, but we really focus on school districts
Mhm.
and income, which tend to correlate a bit, but we're really looking at schools. If we were to look at, say, greatschools.com, since that's something that most people see and know of, eights, nines, and tens, which means we're in the top 10% of school districts, but looking for workforce housing product. So we're looking for product in areas that have a lot of demand for schools, and I think from that approach, that framework allows us to avoid a lot of of the issues that I think have happened in this most recent cycle. People I think were getting into deals in areas that were marginal and getting really high leverage on those through and so by having discipline around submarkets, locations, and income. And we also look at supply risk. If supply coming online exceeds 3% of existing stock, that's an area we won't buy in for at least 12 months. We'll review it again in 12 months and see if it makes sense. So I think having like a really strong institutional quality like framework for acquisitions can really not eliminate all of your risks, certainly, but mitigate those risks.
Mitigate.
And we also max out at a 70% loan to cost. So we have a lot of built-in, conservatism into the way we lever our deals. So.
So why workforce housing, or how did you get into workforce housing?
Yeah, so it's workforce housing is, these are renters by necessity. They have to, they're largely always going to be renters. There's a lot of demand for that. They're not making any new supply. They can't. It doesn't
Mhm.
make any sense. And what we tend to find is you can find these pockets of certain markets where you've got really, really fantastic $100,000 average income in the area, but we can provide an apartment at $1 a square foot or $1.20 a square foot, where a new construction project might be at $2.50 a square foot. And in that particular submarket, you can't build anything anyway because it's a very well established, mature neighborhood. They're probably built out in the 50s, 60s, and 70s. And so there is no extra land that's really viable for these larger complexes. And so we try to stay insulated by being in those neighborhoods.
Great. With this new technology involvement, I shouldn't say new, it's been happening for over the years, but now I think we are stepping into kind of unlimited world. That's what I say all the time with AI being in place or the blockchain or all these tokenization. So what do you think? Are you guys gonna be embracing any of these technologies or trying to kind of, get ahead in the game, or you already maybe utilizing it somewhat?
Sure. So my partner Cody had prior to us working together on real estate had a software development company, and so he's a technologist by trade, and so that definitely kind of eats or kind of moves through the ethos of the business, and we definitely think of ourselves as technology forward. I am not a technologist myself, but I can, at this stage, it's you don't really need to be a full stack coder necessarily. I think if you have systems thinking and you can really describe what you want, you really can create anything. I've created a bunch of tools that can look at all of our data across all of our business processes and surface issues and anomalies and velocity issues and sentiment analysis. There's just amazing things that you can do without having coding experience. So yeah, which is really great. And I would say the things that we've specifically applied within our business, we use an AI, a CRM that has an
Yeah.
AI built into it, and it does do a lot of the interactions. It sets about 35% of our tours directly without any human involvement, and that results in about 20 to 30% of our leases. So quite a few, tours and leases and conversations occur without any human involvement at all. I think it was something like 250,000 AI-based messages that were sent out and responded to via our AI in the last, I don't know what it was, like 12 months or something like that. And so
Wow. That's
it's
good.
definitely working. I would say I think the risk though is people think that AI can just replace everything. And it's just we're not there yet. We might get there in a few years or a decade or some point. But what we found is that a AI assisting a human is a lot better than just an AI or just a human. But when you try to go all AI, you leave a lot on the table. And so there are certainly some programs out there that are really trying to think about it from AI only. Let the AI do everything. Don't worry about your people doing anything. But really, we can't hold a computer necessarily accountable in the way that we want to hold our people accountable. And so it's really about humans that have AI to assist them, and that's where we find we get the best bang for our buck and best performance out of our sites.
That's true. I think the way I look at AI is too, is just more like an extension. It's like a tool. If we use it like that, it's more beneficial at current.
Mhm.
Future, I mean, we can only see as much as we know from your experience what it's gonna look like, but you never know. But still, at current, the human touch, that emotional element is missing. So we
Mhm.
do not know which way it's gonna pan out. Maybe someday,
Mhm.
when machine learning is gonna, learn that, and then it might take over the human race, whatever,
Mhm.
But
Yeah, yeah.
listening to you, the way I hear is your journey has been pretty steady. You've been doing like really right things at the right time. Like you mentioned, one of your managers, she taught you early on, not to make the mistakes or make less mistakes. So I want to ask you this question. What mistakes do you see investors make when they scale too fast without operational depth?
Well, you don't know what you don't know, right? And so I think sometimes and then you have to learn very, very quickly, right? And in this business where most people are raising capital from other people to do that, you're sort of raising capital on a prototype, and so it's like, well, that doesn't seem like a very good, that seems like a risk that the LPs really need to underwrite, right? If you're a sponsor or someone who's operating a deal and you've never done it before, there's going to be a lot of things you didn't know in that first deal, that first five deals, that first 1,000 units, whatever it is, that you didn't think to know about. I think mostly what I would say that comes to mind initially would be people, recruiting, hiring, and setting accountability and culture. We run our own properties, so we're vertically integrated. And so for us, recruiting and finding great people and retaining great people and helping them perform to their best is probably the most important and the most difficult thing that we do, regardless of all the discussion around AI and all of that. Getting the people to do the work in a way that's consistent with high performance and that's consistent with our SOPs every day, day in and day out, year in and year out, across all properties, is probably the most important thing that we're doing every single day, and the thing that we're learning every single day, right?
That's true. Yeah, I agree on that 100% because you gotta have your systems and processes in place, if you wanted to run the business smoothly.
Mhm.
Otherwise, it's just like you say, like a little game for you, or like a kind of sidekick for you, or
Mhm.
you're not serious about your
Mhm.
business, whatever you're trying to do. So,
Yeah.
one last question. I know we are out of time, but still, I
Oh,
wanted to
sure.
ask you one legacy question. When you zoom out, what kind of impact do you want your work to leave for the next generation?
Sure. So, I guess I have two answers to this question, I guess, as you're saying it. So, one, our goal is to continue to scale to be an institutional scale operator and for us to be able to grow leaders in our firm to end up letting them run the business over time, not by next year, but maybe over the next 30, 50 years, we can continue to grow leaders and have them lead and grow this business in a way that isn't in the vision that I have, right? Someone who may have a vision that can bring this company and our what we're doing forward. And so, and that includes being on the top 50 list of owners in the United States as a vertically integrated property, company. Um, the second thing I would say as legacy is, when I look at my life, or hopefully at the end of my life, sitting there, hopefully at 90, 100 years old, with my four children at my birthday dinner with my four children and their children and their children. Everyone's talking to me,
Fourth generation.
right? So all my kids are there, all their kids are there. No one was coerced or forced to come. Everyone is having a good time. And I get to have all of those people with me, at my birthday when I'm 90 or 100. And this is something that I saw from my grandparents that they had that. And I think that, that's the testament to a good life. Whether what the bank account says, how many units
Yes.
you have, it doesn't really matter if at the end of your life you're sitting there by yourself because you couldn't maintain and develop relationships with your children or and so on. So I think that's the success from my perspective is that good healthy relationships with my children, and I have then the pleasure and the privilege of being able to spend my birthdays with them when they have other things they could be doing.
Wow, well said. Very well said. So this brings us to a rapid fire round. I'm going to ask you five questions. You're going to answer it in one sentence or one word only. Okay? Are you ready?
Okay. Mhm.
Um, what does wealth mean to you today?
Freedom.
Share one good book for the audience.
Man's Search for Meaning. I imagine that doesn't
Oh,
come up
that's
that
a really
much.
good book. I have
Yeah.
that one too. That's a really good one.
And
Which
the one that
again,
was the most recent one, because I had to scroll
mhm.
down quite a bit, would have been 40X. So 40X is one of the is the operating system we use for our site teams. So I'm always keeping that one fresh in mind. Yeah.
That's good. So, most overrated investment trend today.
Data centers.
But everybody's investing in data center though. So, share one asset class in real estate that is most misunderstood.
My initial thought was mobile home parks. I think mobile home parks are a great asset class that probably people don't give enough attention to. It's hard to invest in them, but it's a great asset
Hmm.
class.
Okay, so if you could turn back in time and talk to your younger self, what would you tell yourself?
Whatever I say, he wouldn't listen, so it doesn't really matter, right? But I guess I would say, to be more patient and yeah, right, to be more patient and to realize that, things develop at the pace they're supposed to, and opportunities and challenges come to you when you're ready for them. And so, just enjoy the ride, I guess, and not be waiting for the next thing for the next thing.
Wow. Thank you so much, Michael. I really enjoyed this conversation. I think it was not just about the wealth deployment, it was just more like discipline, like you said, you learned from your colleague, and the patience, and the education, and the stewardship, and the market cycles. Thanks for sharing all that with us. I really appreciate that. Can you tell us how people can reach out to you?
Yeah, if they would like to learn more about us, they can go to investwithcarbon.com.
Thank you so much, Michael, again. And for everyone who's listening, hope you got some good takeaways from this episode. So stay inspired, stay intentional, and keep building your wealth vibe. We'll see you next time with another awesome guest. Bye for now.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.